fresh violence in West Asia and hosted by a country still recovering from an earthquake, the annual meetings of the International Monetary Fund and World Bank concluded in Marrakech. The IMF's latest economic outlook paints a sobering picture, with global economic growth slowing to 3% this year and 2.9% next year. Global inflation, while expected to decrease from 6.9 to 5.8% next year, remains at troubling levels. Economists expressed readiness to halt interest rate hikes, but noted that the world economy is limping along, not sprinting. The spectre of heavy debt burdens haunted discussions at the meetings, particularly concerning advanced economies like the United States, China and Italy. Recent fluctuations in US bond yields signaled unease among investors. The re-emergence of bond vigilantes and the end of Great Moderation era have raised concerns. Debt restructuring efforts were seen as crucial, with Zambia reaching a debt rework agreement with creditors including China and France. However, scaling up current subsidies-based policies for climate change efforts was deemed unsustainable and could result in exploding public debt. The IMF emphasized the need for a mix of new policies with carbon pricing at the core. Beyond major developed economies, emerging markets faced additional challenges. Turkey aimed to address structural issues and lower inflation. Kenya sought to avoid debt distress by planning to buy back a quarter of its $2 billion international bond. Meanwhile, progress on debt restructuring for Sri Lanka, that remains uncertain. The meetings underscore that high interest rates could put a significant number of banks at risk if they persist. Furthermore, geopolitical tensions, including the Ukraine conflict and growing trade protectionism, hampered consensus building, leading to the absence of customary final communique. The discussions also included plans to reform the IMF to better represent emerging economies, but concrete progress remained elusive. WION is now available in your country. Download the app now. Get all the news on the move.